You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is Tuesday, October 30th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Tuesday. First thing to know is Trump expects a great deal with China. Investors will keep a close eye on the continuing trade dispute between the U.S. and China, as U.S. President Donald Trump confirmed in an interview with Fox News that he was prepared to slap China with billions more in tariffs if no agreement is made between the two world's largest economies. However, he showed optimism, insisting that he expects a great deal to be reached with China. The interview followed a Bloomberg report that roiled markets, saying the U.S. is prepared to impose tariffs on the remaining $257 billion of Chinese imports if talks in November between Trump and Chinese leader Xi Jinping do not go well. The two leaders are due to meet during the Group of 20 Leaders Summit in Argentina at the end of November. Second thing to note today, Dow Components lead earnings parade. Several household names are reporting their latest results on Tuesday in the last big week for third quarter earnings on Wall Street. According to Thomson Reuters, 78% of the S&P 500 companies that have reported have exceeded consensus earnings estimates, putting the index on track for a 25.2% year-over-year increase in earnings. That's 3.6% above estimates as of September 20th. Third thing to note today is U.S. futures pointed to a higher open. Although Monday's sell-off on the back of the escalating tariff dispute saw the S&P 500 close in bear market territory, the pairing of losses in the last 15 minutes of the session gave investors some hope for recovery that looks set to continue on Tuesday. Fourth thing to note today is the dollar holds near a 10-week high ahead of consumer confidence. The dollar moved back towards 10-week highs against the currency basket on Tuesday as heightened trade tensions exacerbated fears of a slowdown in global economic growth, bolstering safe haven demand. At 5:42 a.m. Eastern, the U.S. dollar index gained 1.9% at 96.76, close to the 10-week high of 96.62 set on Friday. The highlight of the economic calendar on Tuesday will be the latest reading on the health of the consumer, with confidence hovering around levels not seen since the year 2000. Confidence Board will release its Consumer Confidence Index at 10 a.m. Eastern, and economists expect the index to slip to 136 in October from 138.4 in the previous month. Fifth thing to note today is oil prices drop on promises of increased output. Oil prices headed lower on Tuesday as Saudi Arabia and Russia vowed to raise crude output, slashing market concerns over looming sanctions on Iran that kick off on November 4th. U.S. crude oil futures lost 31 cents, or 0.46%, to $66.73 by 5:43 a.m. Eastern, while Brent oil traded down 34 cents, or 0.44%, to $77.03. Saudi Arabia pledged earlier in the month to raise oil output to offset the fall from Iranian exports expected to be caused by the U.S. sanctions, while Russia also said on Saturday that there's no reason for the country to cut its production levels. Our second story today is from Investing.com. Gold shines, but silver remains tarnished. Clever. Whilst gold has found some much needed and welcome bullish momentum, that same cannot be said for silver, which failed to benefit from the recent flight to safe havens, one of the primary drivers for gold. For silver, the price action of the last 2 months has been condensed and contained within a very tight trading range, with the ceiling of resistance clearly defined at $14.80 per ounce, and the floor of support equally well described at $14.10 per ounce. The $14.80 per ounce level has been tested repeatedly throughout October, and as a result, the volume point of control itself is now centered at $14.55 per ounce and shown by the yellow dashed line. This denotes the fulcrum of the market at present for silver, and also the heaviest concentration of volume on the daily chart, so we can expect to see further congestion follow for the time being. Our third story today is from U.S. News and World Report. That's money.usnews.com. How bond options can cut rate risk. Bond yields are rising, which is good news for income-oriented investors who want to earn more, but it's not so good for owners of older bonds who see prices drop. If only there were a way to insure against price declines, or even better, profit when bond values go down. There is, though the process can be pretty risky and challenging for small investors. You can bet on the options market, but with bonds instead of stocks. Professional investors and traders use options as a way to hedge their position, says a professional trader and founder of the Millionaire Mob investing travel blog. Okay. This is the clear case during periods of uncertainty, which we are currently in for interest rates. For a cost, investors can lock in the interest rates on bonds by using options to mitigate any fluctuations in price. You can effectively have a near risk-free interest rate through this hedging mechanism. And that, ladies and gentlemen, is news you can use for today, Tuesday, October 30th, 2018. Your Options News Rundown. I'm Dan Passarelli. Trade smart, and have a great day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.